Hey guys, how are you? This is Ishai Breslauer, your host of the CRE SharkEye Show, where we talk commercial real estate. And today with us, special three specials, special guest, special friend, and a former colleague of mine. So it's like a really special honor. Doni Raskas is a good friend. Doni, thanks so much for putting the time and spending it with me.
I appreciate it. Good to be here.
Always a pleasure. Always a pleasure. Doni, you know what? Before we even start digging into the story, tell us, give us like a 2-minute elevator pitch of what you guys do today.
Absolutely. So I head up acquisitions for Steel Capital Funding. We are a family office, and our primary focus is on assisted living and memory care. We're looking nationwide, and on the side, we're the market, I'm sure we'll jump into a little bit today, but the market is, I guess, anywhere but here. It's everywhere. So we're trying to just find some opportunities. So, we're looking at a lot of different asset classes, but our primary focus is on the healthcare space. And in addition to that, I also have a small side company, Tovak Properties, where I do things such as financial modeling, underwriting, due diligence, things for clients that engage me.
Beautiful. Gives us a lot to talk about, obviously. Listen, give us your story. How did you get into real estate? Of course, we met at a certain point there. So you could tell us a little bit about that too. But I know I was involved in some of it. But, let's go back from the point where you decided, I'm going into real estate. This is the thing I want to do.
Sure. I'm sure you're familiar with the book, Rich Dad, Poor Dad. And, I look at my life, and I was very fortunate that I had a lot of very special and intelligent people that came through and shared their immense knowledge with me and really gave a lot to me. And most notably where I started was when I made the decision, one of my closest friends and we made a decision. We were probably 18, 19 years old. Hey, I think real estate's the place for us. And my friend's grandfather has been pounding this into him his whole life because he's very successful in the retail space in Maryland. And we called him up and said, Grandpa, teach us, tell us your ways. And it was not just interesting, but it just was like hitting a wall and just exploding, because we were given a perspective that we had just never seen before and shown an opportunity that we never realized existed for us. And we actually spent, for the next year and a half, we would get on the phone with him for maybe a few hours a week, and he would just teach us anything and everything. I mean, he taught us what a mortgage is. He taught us what depreciation is in terms of tax benefits. He taught us, what a variance is. One of the things I remember standing out most to me that was just an eye opener was he told us he had a shopping center. And he just ran basic back of the napkin numbers to us. And he said, so I had a parking lot, and I had way too many spaces. So I found a guy with a snowball stand, and he paid me $800 rent. And so I made close to $10,000 in rent. Then he just does a quick 5 cap, 6 cap, whatever you want to put at it. He's like, boom, look at that added value. I'm like, holy cow, you could just put a snowball stand in and you can become rich. and he used to tell us, I think he used to say, he's like 95% of the world is part of the bro club, and they all want you to be part of the club. He's like, be part of the 5%. And just different messages that he taught us, and was really what got us fueled up and fired up, and kind of put the eye on the ball in terms of getting to the buy side, getting to the ownership side, and settling for nothing less in terms of what we were looking for.
So you know what? Okay, first of all, you got a mentor of no equal, meaning everybody wants that kind of a mentor, right? Everybody wants the person that you can call and spend a few hours, and he will actually give you the time. By the way, why do you think that person felt comfortable of giving you such amount of time and spending with you there?
Honestly, what I've learned over the years is that just be humble, because there are so many giants out there that are so excited to share. And, in Judaism, it's a very important principle of our faith that, make for yourself teachers, because it's nice to try and climb, but if you can start on the shoulders of a giant, you're already very high. And he happens to be somebody who's a tremendous giver and very generous with his time. It helped that I was best friends with his grandson. Yeah, he would share tens and tens, if not hundreds of hours with us. I mean, to the point where we were these little 19-year-old punks, and he told us, call a bunch of brokers and go tour properties. And you're not lying, I'm your equity. If you find a deal, I want to invest. And, we were little kids that, didn't even know what a capital stack was. And he had us touring shopping centers. I mean, we were looking at like $1 to $2 million, small retail strips. And he told us he would come back from the tour. He'd say, okay, put together a business plan. Tell me what you do. And then he would take us to his shopping centers and show us. Remember, he took like one of his, those feet measurers, and he showed us, I would add 3 feet here, and that would equal this kind of rent. And it was an unbelievable opportunity for us.
That's incredible. I love this story. This is one of the best. Okay, so what's next in line? You finished, like you're talking, you have a great mentor. Then what happened?
So from there, we fired up. I went to get a master's in real estate. I went to FIU, Florida. In the interim, I actually was fortunate. I had another person I came across. It was a short stint, but it was a tremendous mentorship as well. I had an internship with a very large retail developer in Maryland. And, while I was there, I was helping them they were working on a $400 million retail center. And again, I think, a tremendous takeaway I had just sitting in that office every day was he would pull together these team meetings. And, he's a very successful man. He's a very well-established man. He's earned his seat. And in the meeting where people of all ages, all levels of experience, and he would go around the room and collect opinions as if, this was going to be what made his shopping center successful. And, I saw from a guy like this that it is what made his shopping center successful, because he was probably one of the most humble people. And, he's developed a multi-billion-dollar company. So I had the opportunity to work there. And then I got into
was
the
that
industry.
like, was it, sorry, I'm stopping you. Was that, you would call it kind of an internship? Or
he was another person who I was very fortunate that he came in my life, in
Amazing.
that his goal was to teach his interns. So he told me, he's like, I can give you a role, but if you want, you can just follow me to all my meetings everywhere I go every day. So he made my schedule. And I did absolutely nothing substantial for them, and they did tremendously substantial things for me. So I got to go sit in their Wednesday morning construction meetings. There was nothing I was adding to that construction meeting. I got to go, tour a mall with him that he was going to, totally redevelop. I can tell you, I did not add anything of value to that tour. And then I did some tests. I did some valuable things, but they gave me a lot more than I gave them.
Sometimes it's just good to be a fly on the wall, as we call it, and to learn from people who have such experience. And not only that you were lucky, but I think that it also shows that you were smart in seeing and being humble yourself and saying, listen, there's a lot to learn first, and I have to really listen and see what these guys do before I even, take any step. And I think this is phenomenal. Okay, so you worked for this guy, you went to FIU, very nice. And then what's next?
Sure. So I then decided, getting into the space, I knew very clearly that my goal is to be on the buy side and, ultimately to be, running things on the GP side. And I put together a list of all the people that I felt like were very successful in the real estate space. And I asked them if I could just hop on the call with them and ask them for some advice. And I called 5-10 selected people. And I just asked them, I said, hey, I'm graduating with a master's in real estate, I'm looking to get into the space. Here are my goals. What do you recommend as the most important first step? And there's 2 pieces of advice that I got consistently that were really interesting to me. Both I really didn't appreciate. One of them was less not appreciate. I just didn't understand where it came from. Consistently, every single person told me, learn Excel. Learn Excel while you have the time. Just learn Excel. Meanwhile, I had 0 experience in Excel, and it's like, okay, that's good to know. I'll look online. I'll see if I can find anything.
Tell me something. In FIU, they didn't teach you? or not enough?
We used Excel, but it was definitely not a focus of the class. We had to do everything within Excel. Yeah, there was no like here, this is what sum if is, and this is what,
Yeah.
And the second piece of advice, which really is what directed my next steps, was every single person told me, start off on the finance side. It's important. And for me, I had a lot of resistance to that, because I'm like, I want to be on the buy side. I want to be touring properties. I want to be touching properties. I want to be dealing with construction. And everyone said, start on the finance side, because you need to understand the structure of a real estate deal. And I was very fortunate, again, in different type of people that came into my life. I reached out to a bunch of different finance groups, and thank God I had a few different offers, but one of them came with somebody that I felt would be just the best mentor, Jeff Baum. And
shout out to Jeff.
Shout out to Jeff Baum.
Friend of both of us. An amazing guy.
It was nothing short of that. I wasn't just able to be in a finance shop, but I actually got to be an equity analyst. Jeff ran the equity shop, and really every single deal that came in-house looking to, bring in anything above a typical senior debt piece, whether it be preferred mezzanine debt or, LP equity, JV, we were sourcing that. But, in order to go source that, I had to look at hundreds and hundreds of models from all different types of sponsors with all different types of strategies, all different, structures of the capital stack. And, you really understand where the give and the take are in real estate deals. And, you see a lot of different strategies, a lot of different, sensitivities. And, through that, you really get a broad exposure. So I was fortunate to be there. And I'm very close with Jeff to date. And, again, just very fortunate that a lot of great people popped into my life, and I was, lucky enough to be around them. And actually, while I was there, I made sure to do the second piece of advice I got, because there was another person there, Ruben Noble, actually, who's very successful now in the SNF space, and he was very obviously to me a Excel whiz, and he was the in-house Excel guy. Anybody had anything with modeling that needed to get done, ship it to Ruben. And I went to him pretty early on and I said, hey, can I have 5 minutes of your time every single day? Can you each day teach me one trick? It started with very simple tricks, and every single day I would take notes and just take one trick. And then, by the end of it, I was very fortunate to have gained a lot in that space as well. And after I finished my time there, I got to spend some time with you. And, we worked together in the private equity shop, which was, another fantastic opportunity to just focus on providing LP equity to similarly countless different strategies, different deal types, retail, condo development, et cetera. And that gives you a tremendous, understanding both on the buy side, but also on the exposure side, because, when you're on the GP side, you might be, working on 3 deals this year, but when you're on the LP side, you're seeing baked deals times 100. So, and it goes without saying, just by this podcast, the amounts that I've learned from you, and how, appreciative I was for our relationship, and, the opportunity to glean from you. And
I was the lucky one. I had you. Get it. But first of all, you're flattering me for all those people that
are you blushing?
Came on the way. No, it's the light. I don't blush. But I'll tell you, with all the people that came, meaning through the way, meaning I'm honored that you call me that, but I'm definitely not in that line. With that first guy, with that your friend's grandfather or father, whoever it was, who had the retail business, shopping centers. That's the first guy. And the second guy who does retails and malls and all that stuff. To Jeff Baum was a friend and really an incredible guy. So I'm really humbled. But I think that you are very good at finding the right mentorship and understanding that this is the one rule I always tell people who want to start up in real estate or in any field. You find the best guy in the company who is doing the similar stuff that you want to do, and you go and you ask him for, some guidance. Obviously you can't hack him and, sit in front of him and say, okay, I want to learn everything from you now. People are busy, but to come and say, like you said, teach me one trick, each day or every couple of days. I think that's a phenomenal idea and a great way. By the way, when we were together, obviously we did on the LP side, we had a couple of deals that, if you remember, I threw on you, create model from scratch. Meaning when you're on the LP side, you usually get the model and you have to build up upon upon that model. But sometimes we had to build a model from scratch. And I think that was also a lot of fun, to play so-called GP. But after we did whatever we had the time together, you moved on. We were more of a private equity shop. So beforehand, you came as a broker, meaning it is an equity broker or a broker, whatever you want to call it. But then you started going elsewhere. Tell us about that.
Sure. So at that point, I moved on and worked with a family office that was underway in a 1031 exchange. And this was, a very interesting opportunity for me because, they were gearing up for a very large transaction and, had a certain, whenever you work with groups, it's one of the biggest question marks is, can deals really happen here? I could do my part, but is the equity here? Is our capabilities here? And,
the big question.
A 1031, there's a big price tag if deals don't happen. And what was very unique about this opportunity is that about a month and a half into running full force with this exchange, COVID hit. So we were at the deep in our 1031 exchange, fully spread out, nets out, running through deals that we thought made sense for us, strategies that we thought were bulletproof and safe. And boom, like the rest of the world, we were hit with COVID. But we couldn't sit back and wait it out. That was definitely something that we might have chosen to do if we didn't feel safe at the end of the day. But we had to run through, and actually through COVID, we closed 18 different deals with that 1031 exchange, and it was a really, really unique opportunity. And through the learning curve of COVID, I mean, everybody was learning. And for example, we had a Walmart deal that we were locking up, and it was a very large deal. And there was lots of complications to the deal, but lots of things that we really appreciated. It was a big shopping center. They were subdividing, and we were going to take the large parcel of 4.5 acres with the Walmart. And COVID hits, and again, the boss that I worked for, he very wisely raised the concern, which is we're about to take on a 20-year lease. That's a flat lease. So a lot of retail leases have built-in escalations. It might be 5% every 3 years or whatever it might be. But here, this was a flat lease. So it was a fixed rate rent for 20 years. And he said, he's like, the government's printing $2 trillion right now. And, there's this thing called inflation that, we've never had to think about for the last 20 years per se. But, it might actually be something that we have to really consider. And if, inflation happens, but we're stuck for 20 years at this rent, we're getting killed. And I was like, wow, that's a very interesting theory. I've never heard of this idea called inflation. Doesn't really seem to, you see on leases, there's a, rent increase, and then there's or CPI related thing. And, it doesn't really mean much, but, looking back, it was the best decision we ever had in terms of, having to walk away from that deal, and worked there. And then now I currently am heading up acquisitions for a family office. And as I said, and we're focused fully on the healthcare space.
Tell me something. We're going to get to the healthcare part, and meaning from the experience that you have with different asset classes, seeing different asset classes. But what I want to ask you is very basic. From working from brokerage, then private equity firm or so-called private equity firm to a family office, tell us a little bit about the differences of experiences in terms of the types of businesses that you work for.
Sure. Certainly there's lots of, pros and cons that come with both. And it's very different strategies. The thing I like most about working on the family office side of things is that we're using our capital, and a deal has to really make sense. And, of course, a private equity group, and even your brokerage and your vetting sponsors, you hope that, everybody's focused on deals really making sense. But, in today's environment, when things are in the multifamily space, trading at, astronomical cap rates, threes, I think, is normal now. So I remember I looked at a deal, a few weeks back, maybe 2 months ago, and I responded back to the broker, like, is this really pricing guidance? I mean, that it was like a 3.7 cap. And he's like, I know it's expensive, but if you don't take it, somebody will. And it's like, we've created an environment of, where brokers can sit back and be just so confident and almost arrogant. It used to be a very different world where, pricing was a little more in line. And, now where interest rates, might even, get around the cap rates, it's crazy to consider this. So, one of the big benefits of being a family office is, you're dealing with your own money, and you have to really, really have that sense of honesty to the money, which I think is fantastic. In addition, I think that it allows a certain sense of flexibility that not necessarily exists in, the other structures. In that, today, for example, our primary focus is on the healthcare side of things. Today, I was looking at providing debt to an RV park and, taking down ourselves a 300 unit multifamily deal. So we have a focus, but, if there's an opportunity that's being presented now, we can, in a second, just try to get behind it and see if it's something that we can fit behind. In terms of the private equity side, I guess one other thing in terms of family office, in the situation where the capital's, already there, in both instances where I went out, we were always all cash offers. So, provides a certain sense of, it makes my job much easier.
You're competitive. Yeah.
It makes my job much easier when I can say, we closed in, a matter of weeks last time, all cash. It definitely gives us an edge that I'm very fortunate to have as ammo. And working on a private equity side, it's a whole different ballgame. You're involved with investors and you're involved with, potentially a lot of different buckets, and, it provides certainly another sense of, excitement. And, for the person that likes being on the marketing side of things as well, you're facing not just the deal, but you're also facing investors, and you're trying to get creative. How can we make sure that we understand our investor appetite, and, how can we translate that into the deals that we're looking at? So there's certainly things to enjoy in both. And in terms of the brokerage side of things, that's a whole different animal. That's a whole different animal. And, me, I like just facing and just speaking, but not really selling. Certainly there's always negotiations involved in everything, but I was on the analyst side of things. I wasn't an originator. That wasn't the appetite I was looking for. So in the brokerage world, there's the origination side, and then on the analyst side, I think for anybody for sure getting into this space, it is an unbelievable way to get a very vast exposure to every asset class, every deal type, every structure, all the different, financing
models,
vehicles. Yeah. It's an unbelievable opportunity.
I think that's great. But you know what? This is what actually gave you the experience. The one thing that I'm very curious about is, and that even though I know you pretty well, I would say, I did not know your knowledge in retail. And retail is a unique animal, especially today. But what I want to ask you is, meaning your excitement about meaning you got into real estate, you got excited about real estate from the point of view of retail, because that was the first person and the second person. So retail was really the stuff that you were dwelling, you were in it, right? And all of a sudden, life took you to different type of modeling, different asset classes, obviously the more condo development, multifamily, of course, to healthcare. Tell us a little bit about, and you're not dealing with retail today, that's how it sounds like. How do you feel about that's where I came from in terms of my study, in terms of my learning, and today I'm not dealing with it? What do you feel about that?
Sure. It happens to be that in the 1031, a lot of our deals were retail.
Right. Mostly probably how do you say?
Single tenant, net lease.
Right. Net lease and all that stuff.
So we took a lot of that for strategic purposes. I think, it's, everybody says it in terms of, retail. There's a lot of, talk and fears in terms of the retail space. Obviously, there's opportunity in every asset class. There's opportunity in every location, and it's
Right.
just about approaching in the smart and appropriate ways. Retail, I guess it's a hard asset class, at least for me. It's there's a lot of variable, and it's just a different animal. That being said, I think the pricing that we have been seeing the last few years makes multifamily not too exciting either. That's certainly where we focus, or I focused, and we currently still do look at, but it's I don't think it's one way or the other. But I think it's important to, at least for me, to really have a lane and run with it. And how's that phrase go? Jack of all trades but master of none. So we try very hard to stay focused and stay disciplined while keeping our ears open. And if there's a deal in an RV park that makes sense, we can try to get behind it. But we recognize that because of our our focus, that we're not experts in the RV space. Maybe we'll become them, but we're currently not.
Talking about Jack of all trades and master of none, you had to actually master healthcare because you got into this new position that you had, to get into you got. And the interesting part about it is that healthcare has a totally different modeling. Tell us a little about the knowledge base that you had to acquire in order to, pivot, in order to get into this whole thing.
Sure. So it happens to be that that part of the initial exposure to working in a finance shop is you really work on every asset class. And, I had plenty of exposure to healthcare when I was an equity analyst. We looked at a lot of different deals there. But of course, without getting into the nitty gritties there, you don't really have a grasp in the business. And honestly, I'm always learning, and I think in every asset class, we're always learning. But in terms of pivoting from, maybe a multifamily focus to healthcare focus, there's a lot of shared bones, a lot of them. And, the other focus, in terms of reimbursement and, Medicaid and for sure on the expense side of things, there's, tremendously different thing. Well, fortunately, we have a team, we have our own management company. And any deal we're looking at, I'm certainly running through things with our director of operations there. And, it's certainly a continuing process of, really getting a full mastery in the space. But there's a lot of shared bones between multifamily and, senior living.
What is the main bonus?
Bones, meaning there's a lot of shared, foundation in terms of, the fundamentals to what makes each deal tick and each deal work, so, we're always going to have a revenue side. So so the rent will come in different forms. You can have a retail tenant that's paying you with, this kind of lease. You can have a multifamily tenant that's, this type of lease, and you can have some kind of tenant that's maybe a reimbursement or something like that. But you're always going to have, a revenue side. And on your expense side of things, you at the end of the day are running a housing facility, and your staffing becomes a lot more expensive because you don't just have snow removal and garbage, but you also have to take care of nursing and showering and diapering. So there's just different line items, but it's ultimately the same fundamentals.
Interesting, because sometimes people mix it with a hospital setting, if you understand what I'm saying. And the hospital setting, it's told a different model, but many times healthcare people are confusing it with, it's like, I think it's standing in the line between the hospital setting, right, and the multifamily setting. And you have some kind of things in between, but eventually it's some more, I would say, more similar to the multifamily. We started touching the market. We started talking about the market, and you said, market's too high. Obviously, we have low caps and the interest rate is challenging and all that stuff. Let's talk a little bit about the market today. Very challenging, very hard to find deals. So where are the deals really found?
You asked the $1 million question, Shaq.
Yeah, of course. Everybody wants to know. I'm saying from your perspective, you're obviously the one who's sitting in, you're the front office of looking for deals, finding sourcing deals, right? So where do you go?
Sure.
Obviously, you have the straight answer. I call brokers, I have connections and all that stuff, right? But today's challenging. Everybody's throwing you deals that you don't want to buy. So
sure,
that's my question.
So it happens to be, I think that we're in a transition that for a group like us, actually presents a lot of opportunity. I think for the world at large, everyone's hoping that, maybe 6 months down the line, there'll be already a turn. And I think a lot of people are hoping that, when the people that just got loans for, a value add deal or a construction deal, and they're paying 3% interest rates, when those loans come due and, interest rates are potentially, in the mid fives, that, those deals default and, the market has a recession. People are certainly, hoping for something like that or talking about things like that. But I think in the immediate, for a group like us, we're actually a little pretty opportunistic right now, because we are a heavy value add focused group. And what we've been seeing in the last year and a half has been very challenging to get behind, because, pricing has skyrocketed. Groups had free money, whether it's borrowing money at tremendously low interest rates, whether it be, everybody who had, their money tied up and on hold during COVID, now finally looking to give them their money. So, I think that the groups that were syndicating and the private equity shops were paying prices that were really, unfathomable. And just to be clear, in the healthcare space, very different than the multifamily space. The multifamily deal that's trades at the wrong price, you're buying it at a 3 cap. So it's making money, but you just, it's peanuts. It's pennies on the dollar. But a healthcare deal,
Margins.
a healthcare deal that trades at the wrong price, we're looking at a deal that is losing $1.6 million annually before debt service. So if you take that deal, you're betting on your value add strategy, but just until you've maintained any level of stabilization, you're add on another $1.5 million for your purchase price, because the property losing. And if you don't succeed and you can't sell it, you're bleeding. You're handing back the keys. In the meantime, you're losing millions of dollars. And these things are trading at prices that are, very hard to justify. So I think groups have been able to sell failing facilities at crazy prices, and they've been getting it. But now that I think now that with everybody getting a little more hesitant on the buy side of things, a group like us who's, been patient, we're an all cash buyer, we can come quickly. I know you're bleeding. You're losing $1.5 million. The buyers are not there as much. It gives us a little more of an opportunity to actually, compete a little more on pricing.
So I'll tell you what, everything you just said leads me to a next question. And I know you were continuing, but this is something that is pressing. I really have to ask you that, because you're saying we're going to a deal that is basically, meaning the big title is value add. Value add, there's a lot of things entailed. There are all kind of, deals. You can put value add in millions of places in a deal. So value add is one word for a lot of details. And what I want to ask you is, when it comes to your strategies, and you're saying, you actually gave an example. This deal is bleeding, and meaning it's losing money, and I'm paying $1.5 million more than I was supposed to be paying actually for a deal that is cash flowing. Very, very nice. I'm coming and I'm taking a risk. But you see a value add play. My question is, what value add play would be like the Eureka? Like, I found something, I want to go for it. This is interesting to me.
Sure.
There's a lot of value add plays.
Sure. So it happens to be on the healthcare side. Another big challenge that we're running into is staffing, and general expenses, to run a facility have gone up astronomically. So not only are you looking at facilities that, a typical story of a deal we'll get will be, this facility pre-COVID was making, name your number, $1 million, bottom line, NOI. And it was at 80% occupancy, 80% census. And during COVID, it had a massive dip, went down to 50%, and we're losing $1 million. And now, we've gotten up to 64%. Rents are a little bit lower. It's at 64% occupancy. It's now only losing $500,000. But if you can get it up to 85% and raise rents and lower expenses, you hit the home run. That's the perfect package you get. Most brokers actually say that you'll get it to 95% census and double rents. But
the big question at the same time is, what do you have to do in order to get the rent higher?
Correct.
So what is it?
So the thing is that it used to be that, we can get into facilities and really, believe in our operations, and we can manage better and we can bring expenses down. But unfortunately, the numbers that in 2018 that we're looking at, expenses have gone up tremendously. So when you say what's a perfect situation, a perfect situation is a deal that has, very high rents. And, therefore, so we looked at a facility that was making, on the revenue side, same numbers, if not more, than most of the properties we have, but it was far fewer units. It was just very high rents. So your staffing, you could have a lot less staffing because you have a lot less residents and a lot less, facility, but you're still making the same revenue side. So a perfect deal is a deal where, they did demonstrate their ability to make, $1.5 million, prior. And there's a really good story for what changed and why we think we can circumvent that. And, we do think the expenses that there's room for us to, be smarter, be better, be more efficient. And, I don't think we go into the market ever thinking we're raising rents nowadays. Unfortunately, it's a hard place to, bet your dollar on. But, if we do renovate it, maybe there is upside in the rents as well. But ultimately, I think a majority of the deals we're seeing nowadays come down to our confidence in our ability to change census and change expenses.
You know what? The bottom line is the knowledge of the business. That's the bottom line, is knowing the business. And it sounds like the group that you are part of, they understand healthcare. They understand their field very, very well. So that when they see a deal and you find an opportunity, it's because you have the backing, basically, that there is confidence. You're confident that there is a know-how behind you, that there is
Absolutely.
a real operation that knows what they're doing. And when they're going to enter the deal, they're going to enter. It's not just a deal. It's people. It's a business. It's running the day-to-day operation, and they know how to do it. And that's where the details are. And that's where you know how to find it, because you have that. So I think that's tremendous. That's tremendous. So you know what? Everybody who is listening, obviously, or watching, depends of how they're listening or watching. I think that this is a great lesson to understand that when you join a group, you're not the owner, you're part of a group, you're working for a group in whatever position you are, higher, mid, doesn't matter. Entry, you're coming in. It's so important to know that you're coming for a group, you're working for a group that is professional, especially when they're on the GP side, or running the show side, or a family office that actually runs and manages, that they know what they're doing. It's really, really important to know that you have the right backing. Doni, you know what? Before we said our goodbyes, I think this was tremendous. And you have so much knowledge, from retail to multifamily, to different asset classes all across the board, to different types of businesses all across the board. Tell us a little bit about, if you look at the whole package of your career so far and where you want to go in the future, where you see yourself. I know that you're very happy with what you do and where you are, but in terms of, a vision for the future, and what would you recommend the newcomer into commercial real estate? How should they enter the business in order to get that first step in the right direction?
Sure. Ultimately, I think when I see my ending and my goal, my trajectory, ultimately, I think, I'm in the buy side and this is where I want to be. And, hopefully part of, very meaningful deals, substantial amount of deals, and, partnering into that into a real portfolio, and, continuing to grow. And in terms of guidance, I'm far from somebody to give real guidance, but I think somebody who has a similar goal, I think it's just important to recognize that there are so many people out there that would love to help and would love to share. And, it's seek and, don't be shy, and, just ask people and listen. And, I think the advice that I was given and starting on the finance side and, learning financial modeling and trying to move your way that way worked great for me. I know people that say, hey, start on the actual brokerage side, the property side, and show properties. Some people, and that might work for other people. But, for me, this was a path that I'm very grateful for the advice I was given. I certainly don't think I would have, graciously chosen to start on the finance side, the other side of the table that I wanted to be. But I certainly see the fruits of that, and very grateful for the guidance I was given.
That's amazing. Something I forgot to ask you: which markets you guys operate in, and which markets today you're looking at?
So on the healthcare side of things, we're looking nationwide. Although we're based in New York, really the only state we're not excited about is New York. It's
You're
very,
admitting we
it's
all
very
know.
hard.
Okay.
It's very hard here. We currently own in New York, Rhode Island, and Pennsylvania, but we are looking to expand down to other markets. And in terms of, other opportunities, whether it be multifamily or other asset classes, right now we have been, tracking New Jersey, just in terms of being right in our backyard. But I'm currently looking at something in Texas, and we're open to opportunities. Anybody has something they think might be a fit for a family office that's opportunistic, glad to have a conversation.
Beautiful. Doni, you guys can see the links above below, but maybe you, Doni, can tell everybody how they can find you. You're on the buyer side. Tell everybody they want to throw deals in your, at you.
Sure.
Who should find you? Who should not hack you? Who should hack you? Tell us.
Anybody can feel free to reach out, and you can look me up on LinkedIn, Doni Raskas. I'm sure it's in the title here, and be glad to connect.
Beautiful. So you guys can. LinkedIn is good.
LinkedIn's great.
LinkedIn's great. We all love LinkedIn. You guys can obviously reach out to Doni. He's in the front end of finding deals, sourcing deals. You guys are going to enjoy working with him. That is a guarantee. Okay. I never do that guarantee. This case, I can do that. Doni, thank you so much for being with us. Really.
Thanks so much for having me.
Stick around. We'll schmooze a little more. And you guys, I'll see you.